Welcome back, C3 family and crypto connoisseurs. For those that'd like to join the C3 family, it's as easy as clicking that subscribe button. So, today's happy Friday. Hope everybody's doing well, excited for the weekend. So we thought we'd bring you a little end of the week market analysis. So basically, everyone's talking about all the open shorts right now. There's a lot of open interest on shorts. So if we jump over to the Durbit options expiry, we can see that for today, June 19th, that we have quite a few, 151 puts over around the $36,000 range. So the max paying price is $38,000 for the expiration today, which is at UTC close, which is around 5 p.m. Pacific Standard Time. So max pain is going to cause the most damage for everybody in both sides of the spectrum. So that's typically around where we play out, just because the whales like to cause as most damage as possible. That's how they keep accumulating. So if we look over here at the Bitcoin's futures, we'll look at the latest liquidation. So we can see all these shorts getting liquidated here. So we could possibly start to see people try to go long when we dip right now, but we're kind of in this unknown territory where we really don't know what direction we're headed. So with that being said, let's just jump right into the Bitcoin chart. I'm sure, as you guys have been hearing all over social media and around the charts, is this death cross right here. So this is what everybody's talking about right now. So you know that when everybody's talking about things, typically they don't play out as strong as everybody anticipated. So this is happening. This already started to happen a few days ago. Most people are privy to this once they see these moving averages coming in close together. So we have the 200 on the bottom and the 50 moving average on top. So once these cross, once you have the high crossing over the low, that's when you see some bearish movement. So let's look right now on the weekly time frame. So right now we can see quite a picture perfect head and shoulders. So this is something we're really watching right now. We need to make sure that Bitcoin keeps creating a higher low as opposed to a lower low. So this is what's going to keep us on track and kind of keep us from possibly playing out this head and shoulders. So let's just jump right back down to the 1 day. And when we saw our last dump, this big dump right here, we saw Bitcoin come down around 50% down here to the wick. So we saw alts fall around 70 to 80%. Some of the shittier coins around 80%. So with that being said, that means that Bitcoin fell out first. It was a pretty big move, and then alts made an even bigger move. So one thing that we're watching right now is the fact that alts and Bitcoin are kind of moving in the same percentage wise. So this is really good. We are having a little bit of some bearish movement. Our DBSI numbers are telling us that we are looking bearish, but this is just for the day. So we're really excited about what's coming through this weekend and possibly next week. Once the institutional markets open up, we have all of our global markets opening up. So I just wanted to kind of show you guys the chart, kind of talk a little bit about it. Let's go over here to the long-term trend on the day chart. So I just wanted to show you guys kind of to be aware of the last time that these death crosses had happened. So this was the last one, or one of the biggest ones we had was right back here. This was at the height of the 2018 bull market, and then we came back down. So even after that cross down, we did see a pump of about 50% back to the upside. So that could be considered a bull trap, but we need to just keep paying attention and watch these charts every day. So down here, we again had another death cross, had another death cross here. So with that being said, we can definitely expect this is happening. So right now we're kind of watching to see how far down it's going to go after this. event occurs. So if for those that aren't too sure what a death cross is, if you go over to Investopedia, you can see this is talking about stocks, but basically the same thing. So it's when a short-term moving average crosses below a long-term moving average. So typically the most common moving averages used in this pattern are 50-day and 200-day moving averages. So these are really great long-term indicators to use. This is what you need to be watching when you're making long-term investments and, holding on for dear life. So let's jump into the Ethereum chart on the daily time frame. And right now we're kind of seeing the same thing. It's looking just as bearish as Bitcoin. We kind of got a long-term support line drawn out. So we could possibly see it come down here to the 2000 range, but that would kind of drop us out of the support. So we definitely want to be able to close back above this line right there around the 2100 mark. So we want to close above here and hold this for Ethereum to keep going, which will also drive alts up as well. So we just need to be really careful about a short squeeze. We could see a pump here throughout, like I was saying, maybe towards the end of this weekend into the beginning of next week. So we need to watch that because most social sentiment is bearish right now. And like I said before, once everybody jumps into one wagon, the wagon usually goes down the hill the opposite direction or up the hill. So real quick before we get out of here, let's just look at the total market cap right now. So right now we can definitely see that we're losing momentum, we're losing steam. We have our 200 average is kind of closely approaching. And right now we have a manipulation X. So this you can never be too sure of. When you see these whale manipulation X's, this just means that there is a manipulation move made up or down. So you don't really know exactly. It's not too indicative. So that's why you need to watch your other indicators. So when we come down here to market Cipher B, we can see this trigger wave starting to flow down. So we can expect the total market cap to kind of come back down around this 1.42 range, $1 trillion range. So like I said, guys, you just need to stay vigilant. Of course, this is not financial advice, but always check the charts if you can daily, and just don't make any emotional moves. Put everything aside, the FUD, all the stuff on Twitter. Just make sure you're following the charts and the trends, and that's going to be your friend till the end. So I appreciate you guys sticking around to the very end. Please smash that like button, hit the subscribe, check us out on Twitter, on Instagram, and as always, fam, stay cool, calm, collected. C3 out.